Everybody, welcome to today's Fundamentals. Hello, Peter.
Hello.
Peter, what's new in the markets?
Well, we had the US dollar which practically continued to weaken in the aftermath of the release of the US employment report for October. That was on Friday. At the same time, we had more or less a shifting of the market's focus over the weekend towards the US midterm elections, which are for today. And we expect the midterm elections to practically reign over the fundamentals of the market. The elections as such practically are more related to US Congress, and that would be the House of Representatives and the Senate. However, they are also for a number of governors of certain states in the US. The main interest, though, relies on Congress, and the main reason why is because the Republicans get a shot on practically reversing the current control of the Democrats over Congress. Currently, Democrats have a control over the House of Representatives as well as the Senate, even marginal in the Senate. So practically they need only one seat in the Senate to get a veto on any government decision. Now, such a scenario would produce a gridlock. Practically, on the one hand, we will have a US president which is a Democrat, and on the other hand, we will have a US Congress which the Republicans will have a veto on it. We may very well refuse to turn any orders from the White House into law. Now, the issue is expected to have an adverse effect on the extensive fiscal plans of President Biden and could more or less tip the US economy into a deeper recession. For the time being, the main issues which seem to be discussed would be definitely the economy and the rise of prices, of retail prices. That would be one. The second would be abortion rights, which is also a very hot issue. The overall presidency of Joe Biden, the past 2 years and the next 2 years. And I would also note climate change, education, and gun control. These would be the main issues. Up until now, the Republicans seem to be poised to get control at least at one of the two houses, either the House of Representatives or the Senate. And should that be the case, it will be interesting to see what the market reaction will actually be. We have to note here that the US dollar may also be weakening due to the uncertainty, given that we have stakes which are high and there's not very high degree of uncertainty, but still a wide degree of it.
And what about US stock markets?
Well, US stock markets continue to gain. They were in the greens yesterday, all the three main indexes. That would be the Dow Jones, S&P 500 and NASDAQ. I would be noting that we have a positive market sentiment which more or less tends to support US stock markets. On the flip side, tends to weaken the US dollar, as we have mentioned before. On the earnings reports, I would be highlighting today Disney. It's about to share practically the earnings reports for Q3 and could make headlines. Other than that, I would be noting once again the midterm elections. And the big question is, well, the US stock markets will be getting a boost. There were a number of analysts which were quick to assume that usually after midterm elections, US stock markets tend to get the boost. That's not exactly accurate. There are sometimes when we see US stock markets dipping, dropping lower before actually rising. So I would be holding my horses here.
And what else is on the calendar for today?
Well, besides the US stock markets, we still have a number of events of actual financial releases. I would be highlighting just before the Asian session 2. That would be the first from the US, the AP weekly crude oil inventories figure. Last week we had a substantial drawdown of minus 6.5 million barrels. Should we see another substantial drawdown, even a narrower one than the one reported last week, we may see oil prices getting a boost, as that would imply practically that the US oil market remains rather tight. Also, just before the Asian session, we get from New Zealand the electronic card sales. And should the growth rate accelerate, we may see the Kiwi getting some support. And during tomorrow's Asian session, I would be noting from Japan the current account balance. It's a surplus, it's expected to widen. And if that's the case, we may see JPY gaining slightly, as that would imply practically that the Japanese economy has gained from the international payment system. Last but not least, from China, we get the inflation metrics, both on the PPI as well as on CPI level for October, which could create some volatility for the ASEAN.
Any final comments?
I would be keeping my eye out on two instruments. The first would be, besides the US dollar and the US stock markets for the midterm elections, I would be keeping my eye out also for gold. And we may see gold having a negative correlation once again with the US dollar. Should the US dollar weaken further, we may see gold's price rising higher. And on the FX market, I would be keeping my eye out on the British pound. We saw a British pound yesterday which strengthened against the US dollar, against the euro, against the yen, against the Swiss franc. So it was a sign of a broader strength for the pound. On the other hand, though, we have to note that fundamentally the picture is not good. The new finance minister, Jeremy Hunt, is to make the autumn statement next week on the 17th of November. And most probably he will be announcing tax hikes as well as curtail public spending, which more or less could deepen a possible recession for the UK economy. It was characteristic that yesterday we had Bank of England chief economist Hugh Pill, who stated that should the UK government follow a tight fiscal plan, that could deepen the recession and more or less alter the expectations of the bank, forcing it to replan its intentions ahead. And I would also be noting for the pound that we had yesterday the release of the Halifax house prices. There was a contraction of prices at the rate of minus 0.4% month on month, which is, if I'm correct, has not hit that low since June 2021. It was still in the pandemic, and that was understandable at the time, but in these times to see a contraction of house prices, that would imply practically that a recession is coming.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome to the technical analysis part of the presentation. My name is Peter Yosef. I'm the senior analyst at IronFX. In front of your screens, you have the US dollar index for our chart. All charts to be presented are to be of the same time frame, unless otherwise stated. Now, with no time to waste, we note that practically the US dollar index dropped yesterday, but, and that would be during, if I'm correct, the Asian session, practically hit a floor on the 110 support line. There's one. It was tested briefly, yet quickly bounced back up. And for the time being, it seems like the downward motion was halted. And there is a catch here. Under any other given circumstances, I would be switching my bearish outlook in favor of a sideways movement initially. On the other hand, though, we see that in the European session, the US dollar index has started to drop once again. And at the same time, the RSI indicator, which is below our 4-hour chart, is pretty low. It's at the reading of 36 right now. So that tends to imply that there's still some bearish sentiment left in the market, which could drive the index lower, breaking the 110 support line, and start aiming for 109.35, a level which practically provided support on the 27th of October last week. Actually, that was almost 2 weeks ago, sorry. It was a Monday. We would expect, if that's the case, that the bearish movement of the US dollar index could intensify a little bit asymmetrically. And I wouldn't be surprised to see it breaking also the S2. On the flip side, should the stabilization actually take place, we may see the price action remaining between the 110 and the 110.70 in this area here. While should the bulls find the opportunity to finally take over after continuous drop since the 4th of the month, we may see the price action reversing direction, breaking the 110.70, which is currently considered the upper boundary of the current sideways movement, and start aiming for 111.50. So once again, we see a sideways motion, but there are still bearish tendencies left in the US dollar index, and they should not be neglected. Okay, let's have a look at Euro USD. Euro USD, which was finally able to reach the parallel level, actually broke above it and corrected lower, and is still holding on to the parallel level somewhat. I would expect the pair to maintain a sideways motion on the one hand, given that the upward trend line has been broken. That was yesterday. On the flip side, in a reverse view from the US dollar index, we have an RSI indicator which is above the reading of 50. It's actually now at 63, which is pretty high, so implies that there's still some bullish tendencies left. And should they take over, we may see the price action rising, definitely breaking clearly their one once again, but this time continue higher and aim for the 1.0090, if not even surpass it. Mind you that the R1 has proven its worth, especially here, at this peak here. And that was on the 27th of October as well. So once again, be not surprised to see the bulls taking over, i.e. seeing the US dollar weakening. And in which case we may see the price action of Euro USD rising, breaking above the R1 and aiming, if not even breaching, the R2 1.0090. On the other hand, should the bears maintain control, we may see the price action dropping once again for the lows of 0.9875. that would also be in line with a possible asymmetrical strengthening of the US dollar. While on the flip side, a weakening, which could be the case, we may see Euro USD rising, once again aiming for the R2. A stabilization is also possible, with the most probable scenario being around the parallel level, maybe even a little bit lower. But I think we have the midterm elections, which are going to be creating some volatility here in the markets. It will be an interesting 24 hours. Let's have a look now at cable. Let me adjust the chart a little bit here. Here we go. Now cable has stabilized. It has not broken definitely the upward trend line, but it's a question whether that's still valid. And I think the stabilization of cable, which started far earlier than the weakening of the US dollar, the strengthening of the US dollar, it tends to imply that more or less the pair is in for stabilization just above the 1.1455. On the other hand, the RSI indicator once again is higher than the reading of 50. It's actually now at 59, which, give me a sec. Yep, 58.5 actually, which more tends to imply that the bullish tendencies seem to be fading away slowly but steadily. Should the stabilization be maintained, I wouldn't be surprised to see cable maintaining its current price action just above the 1.1455 support line. Definitely a breaking of the pre-mentioned upward, yet at the same time a respecting of the S1 would be observable. Should the bears take over, we may see the price action of cable dropping, definitely breaking the S1, definitely breaking also the upward trend line, signal of a trend reversal, and the price action may start aiming, if not even breaching, the 1.1250 support level, the S2, which has proven its worth here and here, tested here and here. So it seems to be a pretty valid level. I wouldn't be missing out on that. Should the bulls take over, we may see the price action of cable rising, breaking the 1.1640 resistance line, a level which provided considerable resistance on the 27th as well of October, but also back here. And that would pave the way practically for the 1.1855. Okay, let's have a look at USD/JPY, safe haven currency pair, USD/JPY. In this case, the picture is clear. We have a pair which continues to maintain a bearish movement downwards, and I think it's going to be more obvious in the 1 hour chart despite some false breaks. You can see a nice, despite this break and this testing here, you can see a nice downward motion. Let's open it up a little bit, becomes more clear. And we see that there is a stabilization, even a slight rise over the past, should be 16 hours. Let's have a look. Since the 7th of the month, in the afternoon. Yeah, yesterday in the American session. Now, the fact that we have, especially in the European session, a clear sign of a weakening of USD/JPY, a drop, tends to imply that the bearish tendencies continue, especially given that we have, let's drill out to the 4-hour chart, also an RSI indicator, which is at 39 right now. It used to be at 37, corrected a little bit higher, which could imply that there's still some bearish tendencies left. On the other hand, also note that there's still some room left for the price action to meet the lower Bollinger Band, in which case we may see a restabilization of the pair. Note that the last correction higher was made after the price action actually tested the lower Bollinger Band once again. I think in this case, the best picture, the best chart would be the 1 hour chart. Let me drill out to it once again. And we can see here how the price action is currently testing the lower Bollinger Band. Low Bollinger Band, which has narrowed, as has also the upper Bollinger Band. They have converged, and yet right now they're still diverging once again. So I wouldn't be surprised to see some stabilization over the next couple of hours, and then see once again the downward motion being reignited, aiming for the 145.5. Now, should the bears actually maintain control, we may see the price action of USD/JPY testing or even breaking the 145.50 support line. However, a clear break is required for a bearish outlook here. And should we see stabilization of the pair, we may see it roaming between the 147 and the 145.50. That would imply practically breaking, though, of the downward trend line, except that since, let's have a look, the 3rd of November. On the flip side, should the bulls take over, we would expect a clear breaking of the downward trend line, a signal that there is a trend reversal here, and then see the price action moving higher. Definitely would require clear breaking of the R1, 147 level, something like one break, second break, and the price action then may start aiming for the price, the R2, 148.80. However, I wouldn't expect such high volatility right now. On the flip side, though, it could be argued that we have high stakes and a certain wide degree of uncertainty regarding the US elections, which may increase volatility for the pair the next 24 hours. Let's move to USD/CHF, the other safe haven currency pair. A very, very similar picture, not to USD/JPY, but to, say, for example, the US dollar index. We can see it right here. See the steep downward motion, the correction higher, and subsequent drop. It's also visible here. Steep drop, correction higher, and another drop. So practically, I would expect these two green candlesticks to be a mere correction for now. And I would expect the bearish tendency to continue, given also the RSI indicator for USD/CHF, which is currently at 36.3. So that's pretty low. There's still some bearish sentiment. We may see the price action dropping, breaking the 0.9840, and start aiming for 0.9735. Let me make some readjustments of the labels so it becomes more visible. Major pairs in the FX market today tend to be USD driven. And that's one characteristic which we should take notice of. Note though also the Bollinger Bands which have widened widely. This is the upper one here. And this is the lower one. See how narrow they were and how widely they have driven apart after the steep rise and the consecutive steep drop of USD/CHF. I would be also noting how the 20 moving average is about to meet the 100 moving average. Even lower, we have the 200 moving average, which kindly acts also as a resistance line. Very interesting. And once again, we see that there's still bearish tendencies left in USD CHF. That would be another sign of weakness for the US dollar. Once again, should the bears maintain control, I wouldn't be surprised to see the pair dropping, breaking the 0.9840, a level which reversed the downward motion on the 27th of October and should not be taken lightly. And even lower, we note the 0.9735, a level which provided support for the pair on the 30th of September. Let's widen this again. There we go. Now, on the flip side, should a stabilization occur, I would expect the price action to drop a little bit lower, yet remain between the 0.9840 and the 0.9920. The sideways motion like this one. Given that we have already, the price action has already provided another evidence of the validity of the 0.9920. Note that the level was able to provide support here and here, was tested to the upside here and here. Some mention also these two. Okay, could be. In case we see a bullish movement, we may see the price action rising, breaking the 0.9920 and start aiming for the 1.0030. I would like to have a look at the 1 hour chart though, and that could... No, I'm not doing that. Okay, chill out to the 4 hour chart, keeping it, that's it. Let's move now to commodity currency pair AUD-USD. AUD-USD, which seems to be stabilizing around the 0.6465. That was a level which I have mentioned yesterday once again, the possibility of a stabilization of the pair. Mind you that the pair has broken the upward trend line guiding it since Friday. And that's another sign that we may be talking about the sideways movement outlook with the price action of AUD-USD revolving around 0.6465. On the other hand, we have the RSI indicator, which is currently at the reading of 62, enough to imply some bullish sentiment in the market, which could drive the pair higher. Mind you that the price action has still some considerable room left until it meets the upper Bollinger Band, which makes a bullish scenario even more plausible. There's nothing to stop it from here up until even above the 0.6545. So in a bullish market of AUD-USD for the next 24 hours, I wouldn't be surprised to see the price action rising, breaking the 0.6545 and start aiming for 0.6670. On the flip side, the possibility of a stabilization of the pair and the continuance of the price action revolvement around the S1 0.6465 is also quite possible given the breaking of the upward trend line. While for a bearish outlook, I would require a clear breaking to the downside of the 0.6465 and the price action to reach as low as the 0.6365. That would be the S2, a level which provided support. Let's have a look at the date to be more exact. On the 31st of October and further back at the 28th of September. Let's move now to the second commodity currency pair, that would be USD CAD. A reverse picture should be applied here. Let's have a look. And it does. Once again, we can see how clearly the price action is driven by the US dollar. Whether that strengthens or weakens, that's the one which defines the movement for its pairs. Maybe there would be one exception, that would be, in my opinion, the pound, to a lesser degree also the JPY. Nevertheless, we see a stabilization of USD CAD revolving around the 1.35 resistance line level in general. And I would also note that we have a breaking of the downward trend line guiding the pair during today's Asian session, which tends to imply that a sideways movement may continue to affect the pair until the market decides on the direction of the pair's next leg. Note also the RSI indicator, which is at 39.5, not so low but pretty low, which could also be implying that there is a residue of bearish sentiment in the market left, in which case we may see the price action dropping and definitely aiming, if not even testing, breaking the 1.3350 support line. On the flip side, should the bulls take over, I wouldn't be surprised to see the price action rising and testing the 1.3675. Give me a sec, we have a message here. Now we're asking for the possibility of what would be the next resistance line after the R3, the 1.3835, I suppose. And that would be somewhere here. Let's have a look. Yeah, nice touch. And that would be in red the 1.3975. We can make some readjustments here. Sorry. Yeah. Let's place also a label above it so it becomes more visible. R4 1.3975. Let's make the necessary adjustment of the level as such. Clear. Okay. That should be it. I would be peaking practically. We have 1, 2, 3 peaks. Practically it's 1, 2 peaks. And in my judgment, this peak here, but I'm not saying it's not valid, it's pretty close to the price action of the R3. I would be choosing the peak here, which is also the highest level of our chart. It was a level which reversed a nice upward trend line, upward movement, which was very intense at the time. In my opinion, though, if you want my clear opinion, I would expect a sideways movement with bearish tendencies. It's not like I'm excluding a bullish movement, but it's the least probable scenario for now. And for that to occur, I would expect that the US dollar would have to weaken drastically beyond market expectations. We do not have substantial financial releases from Canada which could support the CAD on the one hand. WTI prices, which is a key product of Canada and has a close positive correlation with the CAD, seems to remain rather stable, so it remains indifferent. The main event remains the US midterm elections and how that is going to be affecting the markets, whether that's going to be improving the market sentiment. At that point, we may see the CAD getting some support as a commodity currency is considered to be a riskier asset, while at the same time that would be weakening the US dollar as it may experience safe haven outflows. On the flip side, should a cautious sentiment take over, we may see the CAD weakening and at the same time the US dollar strengthening. Let's have a look at NZD-USD, Kiwi. We had substantial analysis yesterday of the Kiwi. Let's drill it out, delete it. Note how it has broken this upward trend line, yet it still follows the channel. So in my opinion, that would be still valid. It's interesting how in the European session today, the pair dropped, yet was short of actually testing the low boundary of the upward channel. And it still has higher highs, albeit we have to note here that the higher highs are still somewhat, I wouldn't say lower, but they could be more aggressive, the bulls here. The RSI indicator is at 62, which is also pretty high, implying that there is a bullish sentiment left in the market, which may drive the price action higher of NZD-USD, in which case we maintain our bullish outlook. We would expect the price action of the Kiwi to break the R1 0.5985 and start aiming for 0.6080. On the other hand, we have to note that there is a relative stabilization of the pair. And should that be maintained, we may see the price action remaining between the 0.5985 and 0.5870. We would require, though, a testing or even a breaking of the lower boundary of the upward channel. That would be a signal, in our opinion, that the trend has changed. And our first reaction would be to switch our bullish outlook in favor of a bias for a sideways movement, at least initially. Should the bears take over, which is the least probable scenario but still possible, we may see the price action dropping, breaking the low boundary of the current upward channel. I would require also breaking of the 0.5870 support line, a level which provides support here, resistance here and here, and we may see that paving the way practically for the 0.5770 support level. Note the convergence of the 100 and the 200 moving average. In orange it's the 200, the 100 is catching up and it's about to cross it. It's a bullish cross. Should it occur. Moving now out of the FX market and into the precious metal, gold. Gold, which seems to be dropping after hitting a ceiling at the 1681. We were right to mark this as a possible resistance line yesterday. We edged it a little bit higher. It has clearly broken the upward trend line guiding it and seems to have no signs of remorse, but that picture should change should we drill into the 1 hour chart. We are at the 4 hour chart as always. You can see that there is some stabilization, yet that's, in my opinion, still not convincing enough. Should the bears maintain control and intensify their control, actually, we may see the price action of gold dropping, breaking the 1660. It's currently at 1670. So we're talking about $10. $10 for gold is very little. It can be easily be overturned. And we may see the price action of gold aiming for lower grounds. That would be in case we see the bears maintaining control. On the flip side, should there be a sideways motion, I would expect the price action of the precious metal to remain between the R1 1681, which has once again proven its worth yesterday, and the 1660 level, which was mostly a support line. You can see it back here. and here and here was well tested. So it's a valid level which we should keep an eye out. In case we see a bullish scenario, say for example the US dollar weakens substantially, then we may see the price action of gold rising, breaking the 1681 and start aiming for 1706. $25 difference. Let's move now to US stock markets. We make a start with the Dow Jones. Dow Jones, where we have some considerable work to do. We haven't visited the index for a long period, and definitely the S2, the R2 and the R1 are now to be turned into support lines, given that the price action has moved higher. There's also a nice upward trend line which can be drawn here. Drilling out to the 1 hour chart for more accuracy. Something like this. Back to the 4 hour chart. And let's go hunting for new resistance lines. This is a nice peak. And we have to reverse it into red. That would be the 34,275. Let's go hunting for another resistance line. Let's unlock it, sorry. I would be keeping my eye out on this peak here. It could go even a little bit higher. Well, that would be a little bit too high. This peak here as well. It's a question which we should be a little bit judgmental here. See what happens with the R3. We have one peak, which is here, and you can see that it's the same level as this one. On the other hand, I would be skipping this one. It was too short, but there is some continuance here. As well as here. This was a nice trend reversal. Now, where are we going to be placing now our third resistance line? One option, let me color this in red first, would be here. It would be a conservative option. It's very close to the R2. In my opinion, that's a little bit out of the question. The second level I would be noticing, yeah, that would be one. The second would be here, which is pretty valid. But I'm a little bit more optimistic, and I want to allow for some room for the US dollar index to play, and I'm placing it on this peak here. And that would be, ladies and gentlemen, the 35,000, let's have a look, 500. Yeah. I know it's a little bit asymmetric, but we have a nice upward movement. And let's make the necessary corrections before we move on with the commentary. That would be the 35,500. Above that would be the 34,275. And even higher would be the 33,470. 32,000, and let's have a look. 670. 32,070. And the final one would be at 31,180. For the time being, we still maintain a bullish outlook, and we base that scenario practically on the nice upward movement we had. Actually, some may even allow it to come all the way back here. It would be something like this, which is also pretty valid. And also note the RSI indicator. We have a nice upward movement of the RSI indicator as well, implying also some bullish tendencies in the market. It's already at a rather high place. It's currently at 62 and aiming higher. So most probably we may see the bulls maintaining control, in which case we may see the price action rising, breaking the 33,470 and start aiming for higher grounds. On the other hand, the stabilization would be signaled by the breaking of the upward trend line, and most probably would be around or just above the 32,670. In case of a bearish outlook, we may see the price action reversing direction, breaking the upward trend line, breaking the 32,670, and start actively aiming, if not even test, the 32,070 plane. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Hello and welcome to another of our great videos. Today we'll be looking at slippage. Slippage refers to the difference between the expected price of a trade and the price at which it is executed. So in other words, the difference between the expected price and the executed price is the slippage. Market prices can change quickly, so slippage can occur during the delay between a trade order being processed and when it is completed. Slippage can occur at any time, but is most likely to occur during periods of higher volatility, such as during breaking news of economic data releases. In both situations, forex brokers will execute the trade at the next best price. Under normal market conditions in forex trading, the major currency pairs would be less likely to experience slippage because they are more liquid. So let's look at an example. For instance, you are trying to buy Euro USD with a price of 1.1050 and on your trading platform, you see the price of 1.1050. You click buy as 1.1050 is the price that you want to execute your buy order at. You send your order to your broker over your internet connection. Once your broker receives the order, he needs to check that you have sufficient funds to cover the new order. From the communication transfer to data processing, the steps all create a delay. This means that from the time the broker sent the original quote to the time the order can be executed, the live price may have changed. The difference in the requested price and the executed price is known as slippage. Therefore, the final execution price versus intended execution price will have one of three outcomes: no slippage, positive slippage, or negative slippage. Thank you for watching.
Hey guys, hi. Hey, hi guys, can you hear me? Can you guys hear me? Mic test, can you guys hear me? So let me open the chat. Question and answer. Hey guys, hello. Hi Eric. Hi Mabata. Mic test. Hi there, mic test. Okay, let's give it some moments for the others to join before we begin this webinar. Okay, let's give it a while. Hey, thank you, Eric. Thanks for the confirmation. Okay, let's give it a moment. Okay, well, we can start. Okay, hello guys, welcome to another IronFX solid trading webinar series. Well, today I will be presenting to you the martingale strategy. Okay, as usual, we will give the disclaimer. Okay, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So do take some responsibility when you are trading and have proper risk management. Well, let me introduce myself. Okay, my name is Chen Yongqing and I am the trade analyst for the company. And we are the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and also 2021. Just to remind you guys one more time, all trading involves risk and it is possible to lose all your capital without proper risk management. Okay, before we start this presentation too, let me head on to the IronFX YouTube channel. So you guys can actually take a look at youtube.com. I'll send the link in the description. You can subscribe to the IronFX YouTube channel where you can look at the past live streams, videos, and especially in the playlist, you can check out the previous webinars. They might take some time to upload, but it will be there. Also on the IronFX website, ironfx.com, you can find webinars like this under webinars, free Forex webinars, and you can start to register for it. Okay, my face is not up here yet. Well, it's fine. Well, it's fine. That's my team member, Tianing, Annabelle, Jindao, and Desmond Leong, who is our chief trader. Okay, without further ado, let's get right into the good stuff. Okay, today I'll be presenting the martingale strategy. First, we want to know, what is the martingale strategy? Does it work? Some examples of martingale strategies and the limitations of the martingale strategy. So today, before I begin these two, I would like to say that the martingale strategy is a very, very high risk. It's a high risk trading method, and it's not for everyone. It's really not for everyone. So if you do plan to use this martingale strategy after this webinar, do really exercise caution and proper risk management. If you don't have proper risk management using the martingale strategy, you can blow your account. Okay, what is the martingale strategy? Well, it is based on the theory of increasing your amount even if the value is falling in expectation of a future increase. So what does it mean? You are stacking entries. So every time let's say you are taking a sell, you are okay, let's say you want to buy. So when price goes down, you buy. But it goes up nicely, but all of a sudden it continues going down. So your next entry, you actually double your lot size, double your risk. So it's, instead of 1 times, it becomes 2 times right here. So you buy again, but it continues going down. So your next buy, it becomes a buy 4 times for price to come back up. So you are actually averaging down to avoid your losses rather than you are seeking profits. I'll explain more into the next slide. Okay, so it is a high risk and a high reward. So what do I mean by high risk and high reward? Let's say you are buying. Let's say you buy 1 times. But when it goes up even higher, comes down, you buy 2 times. And continue going up, come down 3 times. So by the time it reaches up your lot size, there's so much. So let's say here was 1 lot. 1 lot. Your second entry became 2 lots. Your third entry became 3 times 2, 6 lots. So total adds your take profits. You would have a total of 6 plus 2 plus 1. So you got like 9 lots running to your take profit. So that is what I mean by high reward. But if it goes the other way around like this right here, you can lose a lot of money. Okay, the martingale strategy, the example, I maybe will use something like the coin flipping game. So let's say you are playing a game, heads or tails, a coin, you are just flipping a coin with a wager of $1. There's an equal probability, a 50% chance that the coin will land on either heads or tails. So let's say you bet on heads. You say you confirm $1, you confirm will get it, heads. But when you lose, you double it. Instead of risking $1, you bet $2. So as long as you stick with the same call, so continuously you continue betting on heads. So take it as heads, is the buy, and tails is the sell. So you are continually betting. Every time you lose, you double it. $2, you lose, go on, it becomes $4. You're just betting and betting. As long as you stick with the same call, the same buy call, you would eventually, with an infinite amount of money, you can see the coin land in your favor. So this method works if you have infinite amounts of money. That's the reason why I mentioned that you have to use proper risk management if you are using this method. So I'll show you an example. You are betting on heads. You lose once. You lost $1. But the next one, you double it up and then you lose again. So total, you have lost $3 by here. So again, you double it up to $4 and then you total, you lost 4 plus 3, lost $7. Then finally, you bet times 2, 8, you bet $8 and then you finally won. You won $8, but $8 minus 7. Your total, you only made $1. You only made $1. You only made your original here, your original bet after risking so much. So this is very high risk. Very, very high risk. I know revenge traders also do such thing. So if you want to talk about revenge trading, I might have some personal experience that I would like to tell you. So last time I did something pretty similar to the martingale strategy. So after I lost one single trade, let's say I did one lot. I remember I clearly did one lot. After one lot loss, I lost $100, so it was 10 pips. After that, I doubled my lot size to 2 lots. So I was hoping I'll get back 10 pips. I will cover back my losses and also make a nice $100. But the huge issue with that is there's a lot of greed involved. So it nearly hit 10 pips. So I was up around $160. That was 8 pips. I could have already broken even on my $100 loss and made a nice $60. But I did not do that. I let it run because I was greedy and wanted to break even and also make the $100. In the end, I blew that 2 lots. So total, I lost $200. Take it as here, 1 lot. I went up and then I lost $200. Total, I lost $300 already. And then I continued so on and so forth, doing 5 lots, revenge trading. I remember I blew over $2,000 in one day just by revenge trading and not keeping my emotions in check. So that was way back. It was during the first year when I started trading. So let's move on to a brief explanation on the chart. So you buy 1 lot at the very top. So let's say you are a bad trader in that example. So you buy 1 lot, price continue going down. So you stack 2 lots, but price continue going down. Then you double it, 4 lots, hoping that the price can go up. Somehow you can break even. But price continue going down. So you buy 8 lots. By now, for most of us, we are running out of the call money already. By then, our accounts have been blown. But let's take it as this trading account has unlimited money. Just take it as that. So price continue going down. You buy 16 lots, you double it. So with all the calculation in place, if price somehow goes back up, so it took very, very long. It took a few months before price hit break even right here. Hitting break even. So the 16 lots has to go up to cover all these positions to break even. It's so risky. So it took very, very long for it to break even. So it took around nearly a month just for break even. And for price to move up this small little tiny area, you made a small little profit, maybe 1%, depending on your risk. But this is the break even level. So yeah, it's very, very risky. You're just betting, buy 1 lot, buy 2 lots, buy 4 lots, all the way down, 8 lots, 16 lots. There's no end to that. There's no end to that until you blow your trading account. So I do know some people in my country. So I'm from Singapore. So I do know there's someone who is using martingale strategy. He programmed his own EA, his trading indicator, so it automatically starts to buy or starts to sell when the market condition is trending. So if you notice, it works very well in a trending market. Works very well. So but if you are wrong, it's very, very bad for you, obviously. So let's take it as everything reversed to a sell. So you're selling 1 lot, sell 2 lots, sell 4 lots, 8 lots, and sell 16 lots. Going all the way down, you're making so much money. So it's actually working pretty well on a trending market, but not good if you got your analysis wrong. Hey, hi there, Richard. Nice to see you. So yeah, I'm just presenting about the martingale method, martingale strategy. Okay. Moving on, does it work? Yes, it's very popular. It's a very popular strategy in the Forex markets. Many beginner traders actually use that. Many of them use that. And it's unlike stocks, it almost never dropped to zero. And for this method to work, as I mentioned, you should have infinite amount of money. Because you will just double it every time you lose the trade until your account hits zero. You get the margin call. So really do take note if you are using this method. Okay, another example of a martingale strategy that is not going right in the favor, or it might be going right. So you buy 1 lot, price goes down. You buy 2 lots, price goes up. You close your trade right here. You would have made your original risk. So maybe if you risk 1% by closing right here, you break even on this 1 lot trade, but using this 2 lot trade to go up. So 1 lot, 1 pip, it's equals to $10. So 2 lots, 1 pip, it's equals to $20. So that's the reason why this 2 lot buy right here is able to cover your loss from the 1 lot buy, although you bought at the very, very top right here. So you continue going on. Example, buy 1 lot, but then you lose. You go down, buy 2 lots, it covers up, you break even here, and then you make 1%. You made it back, but the risk is very high. So buy 1 lot, continue going down, you buy, price goes up, you break even somewhere in the middle, and then you take your profits 1%. So yeah, it's very, very risky. It might work. It is possible to make money off it. You can make a lot of money off it. And you can also lose a lot of money using martingale. Okay, moving on to the next slide. Okay, I'll be talking about the reverse martingale, anti-martingale. So from the bottom, let's say that you are doing things very right. You are doing right. A safe. This anti-martingale, you are risking 1%. Only 1%. So you buy 1 lot, you move up, you cut your next lot size by half. So if the event price comes down, you can break even because your 1 lot buy is able to cover the 0.5 lot buy, which is going up. But instead it comes down, you break even nicely. So you buy 0.5 lot, price continue going up. You buy even smaller, 0.125. And then if price comes back down here, same thing, 0.5 lot is able to break even. And then you would have made money using on the 1 lot all the way up. So I know it's a bit confusing, it's a bit messy. But yeah, martingale, unless you are very, very good at your risk management and your directional bias is right, yeah, you can make a lot of money. But if you are wrong, you are just continuously going to lose money. So price continues going up, you halve your lot size. If it comes down, like in this situation, you would have broken even for this buy and this buy. This buy would have been a losing trade, but this 0.125 lots is able to break even your trade right here. And yeah, that's the reverse martingale. But what people normally teach is you just double your lot size, double it, 1 lot, 2 lots, 4 lots, all the way until you make money. So what are the limitations of the martingale strategy? As just now I did mention, your amount invested can reach huge proportions after a few transactions. It works very well. I need to emphasize this once again. It works well in a trending market. So trending markets, so price is going down, you think the market is on a bearish trend, so you continue doubling on the sell. So it works well in a trending market, and if your account has infinite money. That's the reason why a trader runs out of funds. They keep doubling until they get the margin call. There's no free margin anymore to enter your trade. And then the trades get exited, not by you, but your broker margin called your accounts, and you have no money left. Your losses phase can be disastrous, can be very, very huge. And the risk to reward ratio is not reasonable at all. So just now I did mention about the coin flipping game. So you just flipping your coin non-stop and double your size until you make back your original $1 that you are looking for. So high amounts are spent and keep losing until you win to earn back everything. The final profit is only equal to the initial bet size. So it's a very, very, I wouldn't say it's a bad method. It works well, since it works well in the trending markets, but it's as good as you are going to a casino. It's as good as you are going to a casino. If you lose, you are playing some kind of slot machine, lose money, you double it to earn it back, and you double, and that's how many people go bankrupt and owe money to the banks. They owe money to the banks because they keep borrowing money, keep doubling, trying to earn back what they have lost and get into deeper debts. So far, anybody has any questions? Do let me know. Any questions at all? Or do you guys use this martingale method? Do let me know if you guys do use this martingale method or you guys are planning to use. I'll go on to the charts. Let me move on to the charts. Okay, let me load my webinar slides. Okay, let me look at the euro dollar. We might have something. Okay, looking at the daily. Let's say you are just looking at the daily. You don't really know how to trade. Let's have that in a current situation. So you can see clearly, price is in a bearish trend. Bearish trend, price is going down, but let me get the feed channel. Okay, this is quite messy. I'm not sure why, but this is quite messy. Okay, never mind. I'll just draw it out using the. Okay, never mind. I'll just use a trend line for now. I want to use the feed channel because it looks better, man. Yeah. So I draw the feed channel up, and we are in a bearish trend. So resistance line. Resistance line. Just remember, if you want a varied trend line, it must have at least 3 touches. So what do I mean by 3 touches? So you have the first touch right here. Let me draw it clearly, everything nicely. We want it very proper. So price, 1 tap, 2 taps, and 3 taps. So this is a varied trend line. Next, we have at the bottom to confirm it, 1 tap, 2 taps, 3 taps, 4 taps, 5 taps. This has a higher confluence, very, very high confidence that it is a valid trend line. Okay, let me clear this out. Okay, so you can see price has already broken this area, so we will not touch that. Let's move back to the martingale strategy. So it works well. It works well if you start to sell. If you get your directional bias right. So I'll just write it down on the chart. So you go up, you sell. Sell one lot. Sell one lot. Let me change it to 20. So you sell one lot, then you sell two lots. Although it's not the perfect entry, so you sell the bottom, sell one lot, sell two lots, and sell three lots. 4 lots, I mean, 4 lots. 8 lots. So you're just doubling and doubling, trying to, there are many people on YouTube, all those Forex gurus, they like to say, oh, you can double your account. Let's do a challenge. Challenge yourself to from $100 to $1,000 account. Then $1,000, they ask you to make 10K. Then from 10K, they ask you to make 100,000. Think about it. $100 to $1,000. Let me write it out on the chart to get that into perspective. $100 turn into $1,000 account challenge. All these kind of challenges is like nonsense, man. So you're actually trying to increase your account size by 1,000%. 1,000%. The only way to do that is to double up. You can do it on the martingale strategy. Very, very fast. Your account, if you're right, you can make a lot, triple your account or 10 times your account if you want using martingale strategy. So this challenge is like very, very high risk. So yeah, that's the reason why I mentioned always only risk 1%. So let's say you are risking 1% of $1,000. So let's say we have a $1,000 account in play. I'll say what? Okay, I shouldn't say in play, accounts used for trading. So we want to risk 1%. So let's say you you'll be thinking, oh, maximum I want to do 3 sales. I want to sell 3 times only. So if the 3 sales didn't work out, I want to get out of the trade. So this I'll be showing you guys a anti-martingale strategy. So let's take, you want to sell 3 times, or maybe, yeah, 3 times. So you divide it out. Each time you enter, you're risking. So this one should be 4. Wait, let me do a calculation. 4, 2, 3. Maybe 3. 6, 9. 4 plus. Okay, maybe you can risk this, the first entry. 0.1%. Let me type it out. Risk 0.1%. Yeah, so it's a bit complicated. Risking 0.1%. Moving on to risking 0.2%. 0.4%, I mean 0.2%. Next, you move on to risking 0.4%. So total you add up, what's the total so far? It's 0.7%. So including all your other commissions and stuff, total add up, it should be around 1% or close to that. So in a situation where you are risking that 0.1%, let me calculate it out. So you take your $100, you divide by, let's say you are going for a buy. You are wrong in this situation. So you are buying, you are doing martingale, you are trying to buy and buy and buy. So this is a nice way to manage your account. Buy. But this is only on a 1% risk on a $1,000 account. So you risk 0.1%. Let me count. $100, So your stop loss, let's say you buy at the very, very bottom, your stop loss at the very top somewhere. Okay, this is not a good example. Okay, I'll just have an example. You do is according to your stop loss. So you buy, let's say on the $100 account, 0.1 lot. But as it goes down further, hits 2, you start to lower your risk, increase your risk to 0.2 lots. You move on to buying 0.4. So it adds up, adds up, adds up. So it goes down, and then if it hits your stop loss, buy. You keep hitting your stop loss, buy, keep hitting, and the final stop loss hits, or the account closes, and you would have hit your stop loss, and then you would only lose 1% of your account. Okay, do let me know so far if you would want to implement this on your live trading account with your hard-earned money. Do you want to do that? Yes, no, yes. That's smart thinking, bro. Yes, do not use that on your live trading account. I mean, some people is working well for others. I've seen someone in real life, he used martingale strategy on his personal EA. He has these bots. So price continues trending, and he has a EA. He keeps buying. So it works well in the trading market. I actually saw he made a lot of money on a very, very small account. So he basically tripled his $1,000 account. At the end of the month, is around 4,000 over, nearly 5,000. He 5 times it. But then the following month, price reversed and he continued losing money. Yes, it's far too risky. It's way too much, man. It must as well go to the casino, right? Go casino, throw your money there. At least you might have a chance. You might not. It's the same thing here using martingale. You're just betting that the market is trending downwards. So yeah, it's far too risky, Eric. Yes. So yeah, for me personally, I use something called, maybe if you guys are interested in my own personal trading method, I use smart money concepts. Have you heard about that? Smart money concepts. It's been working quite well. Smart money concepts. Okay, what trading method do you use, Eric? Do let me know in chat. Let me know what kind of method you guys are using, and the others that are watching too. Please don't be shy. Just send your trading method in chat. There's no right or wrong. Every trading method is subjective. There's no right or wrong. Okay, I'll just type out my trading method right here. So we are looking at the euro dollar. Smart money concepts. Okay, I'm using this method, smart money concepts. So I'll just simplify it for you. It's pretty, okay, I'll try to simplify it as easy as possible to understand. So if you're looking right here, I'm using the company's TradingView account. So on my personal TradingView account, I do not use any indicators. 0 indicators. I don't use any, 0. So 0 indicators involved. So you can see everything is off. So if I turn it on, it will turn on, everything will turn on. So I use 0 indicators. I don't use any of it. What I like to do is I like to mark out the previous daily high and previous daily low. So I'll get the trend line. A trend line. I'll just teaching you guys a method that I use that I managed to turn it profitable. It was a profitable method. There is no indicators used. So when I'm marking out the previous, what we are looking for is the previous daily high and previous daily low. I'll type it out, previous daily high. And next we have the previous daily low. So if that's marked out, what you want to have is a daily bias. So the daily candle, you want it to move up or you want it to move down, you must have a bias and you must have some kind of story. So I like to craft a story. It's like I'm drawing art. I like to craft a story on why price did that, price did what it did. So looking to the left, okay, I wouldn't look to the left, it's too far. Okay, let's look at a more recent area, like this area. Why price bounce or why price reflected off this area? There must be a reason to it. I always want the reason. So if I zoom in very, very carefully, have you guys heard about liquidity? Liquidity. So liquidity is resting right here. You can see all these wicks. This wick price, what did it do? It came down, cleared this liquidity before it continued going up. So I'll mark it out nicely on the charts. This is on the daily chart. I'm just getting a story, just crafting things up. So I'll draw one line trade. I'll change it to the sell side liquidity got taken. So I have a story why price bounced. If I zoom in very carefully, you can see very, very down. Can take a look here. Price came down. Just imagining as the market is like a magnet coming down, just to clear your stop loss. So you have a stop loss here, you cleared your stop loss, getting liquidity, cleared it out, getting liquidity before price continue moving higher. And then same thing right here. Price cleared liquidity. Where was it clearing? Let me draw a line. Sell side liquidity taken. So you can see I'm not using any indicators. I'm just drawing out what I see on the chart. So liquidity was taken over here and over here. So take it as the market, same thing, came down to clear your stop loss, getting that amount of cash, getting people out of the market before price continue moving upwards. So with that, price continue moving upwards, but why did price reflect? Why did price head down? So using smart money concepts, we have something called the demand and supply zone. So if I draw a box, we get everything out. So we draw a box right here. A red box because it's a sell. So you can see price tapped into this supply zone before it reflected down, cleared the liquidity area before it continue up. So same thing. If you want to start going at the smaller time frames, daily, price also cleared the liquidity right here. Before it reflected down, it tapped into the supply, reflected down, cleared liquidity before it moved higher. So since we have crafted that story out on what price is doing, we move up further. So price also cleared the supply, the entire supply area before it reflected down. So adding on, there's liquidity lying down here, lying right here at the top. So it cleared, it exited out, this area going up, clearing out all the stop losses. Just imagine it as that before touching into the supply zone and it reflected down. So we are getting closer and closer to the story of what is happening on the daily at the current market right here. Okay, so with the liquidity cleared, I will just draw it out. Trend line. Okay, the magnet too. I'll set this as the buy side liquidity. It got taken out before it reflected right back down. So if you guys can actually screenshot this if you are interested. Smart money concepts, my psychology for this, I like to say that I like to use precision. By trading, I want precision. Psychology. Why psychology? You must have a very, very strong mindset. So if you have a very, very, very weak mindset and you are using the martingale strategy, as I mentioned earlier, I don't think you guys can hold a trade for long if you do not have a strong psychology. You will be in deep losses, continued losses. And by then you would have potentially closed your trade early and potentially blew the account earlier than expected. So psychology, precision, and market facts. Why am I talking about market facts? Why market facts? Just like I mentioned, liquidity. There's no argument, there's zero argument to say that price came down and did what it did. Because it's clear, it's on the markets, it's on the chart right there. Price literally came down to clear liquidity before it bounced. And price over here too, clear liquidity, and then bounce. So what I like to call this is inarguable. You cannot argue the market facts that is presented itself on the chart. But what can be argued? What is not a market fact? So, you know, many retail traders, they like to draw trend line. Wow, they like to draw a random trend line. They say, wow, price is going up here, going there. And right here, price has already broken. Oh, it's broken, it's coming down. But if you take another trend line, you draw it this way, price is still above, it's still trending, it hasn't broken. So it's very, very subjective. It's not a market fact at all. It's not a market fact at all, man. So huge issue with this is, if I ask 100 people, 100 people sit down in a room and ask them to draw a trend line, say, oh guys, everybody sit down, here's a pen and paper, here's your chart, or here's a laptop. Everybody gets a laptop, and then you draw a trend line. Show me where the market is trending. So people will draw, wow, they have a trend line. Some people use this trend line. Some people draw it like that. And they say, oh, we have markets broken, market structure broken, trend line broken. Or some people even use the body of the candle. Use the body, and then they're trying to move it. They move it around. And they can say that price just reflected. They can even say price just reflected the trend line. So that's the very huge issue with drawing trend lines. It's very, very subjective. Everybody draws their trend lines differently. So that's what I like to talk about, market facts. It's not a market fact if everybody is drawing it differently, right? It's not a market fact at all. So what you want is the market facts that liquidity was cleared. This cannot be argued. You cannot say, oh, price came down to here because there was something. No, liquidity is presented itself on the chart, especially right here. Liquidity cleared, liquidity right here cleared before price finally cleared, tap into the supply zone before it continued downwards. Okay, moving on. So since we have got a idea on what is going on in the daily, so we have already crafted, I've given you the story, what is going on, why price move the way it is. I want to know everything before I start trading the pair. So I do not trade multiple pairs. I only focus on the euro dollar, euro USD. So I got my entire mind. So I'm just looking at the charts. I know exactly what happened on the daily. I don't have to redo my charts. So going down to the 4 hours. Okay, maybe before we move on to the 4 hours, I spotted liquidity resting right here. Why is it resting right here? Because there is a equal low. Equal low candles are liquidity. So I'll just write it out right here. Write it out here. Equal lows. Equal lows. So I spotted an equal low there already. Moving on to the 4 hours. I also continue. I want to craft what is going on. What is going on right there. So you can see right here, price, where is price currently at? What I like to talk about a lot is market imbalance, market inefficiency. So if you look at this candle, do you like it? Oh, you like it? Oh, it's just smash all the way down. Then you say, oh, I can look for a buy, or I can continue selling. But with a candle that big like that, and then you still want to sell, do you think price can continue going down? No, because when people see such a candle like that, they start to buy. They start to buy up. So we have something called a retracement. So using the retracement, we are looking at the market imbalance, that is right here, the market inefficiency at this area. So price is currently inside the inefficiency area, or the market's imbalance. So let me use a Fibonacci to draw it out. Let me draw it out nicely for you guys to see. Where is it? Fib retracement. Now use my fair value gap. So if you look very, very nicely, first of all, do you have any questions on how to spot market imbalance before I continue? In case it confuses you guys. So market imbalance, you can see very nicely, price is inside right now at the moment. Market imbalance is very, very useful to find out where price might potentially head to next. So you can looking back at old data right here to prove market imbalance. Same thing, it is a market fact. There is a market fact that there is an imbalance there. It cannot be argued. It's presented itself on the charts. There's no way that you can say, oh, there's an imbalance at some random area. Nobody will. It's impossible to argue on that. So you can see here, there's a market imbalance resting right here. Price came in, tapped, continue going up. Market facts. Price came in, right here, tapped into the market imbalance before it continue heading up. So yeah, market imbalance inefficiency is very, very important in trading. I know there's something new. I don't think there are many people who talk about market facts. What is a market fact? So yeah, I like to present my trading style as market facts. So setting the market, okay, let me redraw the entire feed. So we have a market imbalance there. Can take a look. Price tapped into it before it continue bouncing up. So next, look at this market imbalance right here. Very, very tiny one. Right here, price came in, tapped, and it continue moving up. Same goes to here. The huge issue with this kind of trades, this kind of huge entries, is there is a very huge market imbalance. You can see right here, price actually came in to have a minor tap before it continue upwards. But what I don't like about this market imbalance, about this specific area, is because it is not mitigated. Mitigated, I will type it out in chat. Mitigated. So what is mitigation? What is market mitigation? I want it to at least be close to the 50% area. You can draw it out, can take a look. I'm using a gun box. So I prefer it to be quite close at this area, the 50% equilibrium before it continues going up. But for this case, we might expect, since it's not mitigated, we might expect for price to possibly, let's say if EU is continued to be bearish, where is the forecast line? Where's the forecast? I normally just start it. Where is it located? Okay, so we have the projection line. So we are looking for, if EU is possibly continuing bearish, we can look for price to, okay, why is this not the right tool? Okay, the forecast, we can look for price to tap into the, okay, I need to hide all these text nonsense. How do I hide all these source text? Source background, none, I don't want it. None of that. Hide all of those. Opacity, none. Target border, none. Background, none. None, I don't want all of those. Give me a moment. Okay, with that being in place, let me see. Okay, there's still something. Failure text in white. I don't want any of that. Okay, so forecast, it's possible for price to come down. This is on the 4-hour chart, to come back down to mitigate this 4 hours markets imbalance that was resting right here. So I'll just write it down, a very, very quick one. Where is the call? Okay, I'll name this as the H4 unmitigated markets imbalance. So right now I'm just drawing what I see on the chart, which I presented as market facts instead of using indicator. So if you use multiple indicators, moving average, RSI, all these kind of other things, it may not show the same sell. So one indicator can indicate selling, another indicator state buying. They are just lagging indicators using calculations, using formulas to tell you where to buy, where to sell. But I don't like to use any of that. So I would rather look at what is presented to me in front of the charts. That's why I want what is presented on the charts before I start my trading. So with that forecast in play, it's possible that price might come back down to clear this H4 unmitigated market imbalance. Well, since we are, just now I did mention we are currently in the H4 market imbalance, let's dive down to the 1 hour. To the 1 hour where we can potentially see what is going on. So in the 1 hour, we have actually tapped into the 1 hour. So I'll move this up, the 1 hour market imbalance. You can see right here, it's very, very clean and obvious. It's very, very clean. So price tapped into that, just had a minor tap before it rejected almost immediately. So yeah, that's the market imbalance right there. So tonight, later on, we have the FOMC news. So if you're trading euro dollar, you should be careful on your trading. So yesterday, let's take a quick look at Forex Factory. Take a look at Forex Factory. Yesterday, the construction spending was better than expected on the USD. Previous was minus 0.6%. They forecasted minus 0.5%, but it turned positive 0.2%. So it's insanely good for USD. So even the job openings was better than last month and way better than expected. Way higher than that, man. It's like plus 1 million on top. So yeah, I was looking at these two. So these two gave the very, very good news for yesterday for USD. 10 p.m. So Euro USD plummeted with the DXY strengthening. So I'll just do a quick one on why the construction spending is very important, although it's a yellow color news. You are thinking, why am I looking at that? It's yellow color news. Why do I care so much? Well, what you are learning from, I learned this from someone who used to work in Goldman Sachs. Yeah. So this is a secret. This is a secret source. So for those who are here, you are very, very lucky to be learning. You cannot find this on, I don't think you can find it on YouTube. You don't find this anywhere. So it's a secret, although it is a yellow color news. So construction spending, just think of it. Construction spending increased to a positive side. But where do they get the money? Builders, they need how much money to build a house? So maybe build an entire apartment, they need $1 million, few million. But where do they get the loan? They need money, right? So they are getting money from the bank. They are getting money from the bank. So the bank is lending them money, but for the builders to build the houses. So the builders are spending more money to build houses. But why? Why on that? They are expecting that they have people who are able to buy the houses. So if people are able to buy houses, the banks will lend the people money to be able to buy houses, and at the same time, they are lending both builders and people to buy houses at the same time. So this tells us that the banks think that the economy is improving. So yeah, construction spending is a secret source. So yeah, yesterday, due to that news, I immediately shorted Euro USD. So you can take a look right here on the 1 minute chart. So I'm usually on the 1 minute chart when I'm trading. So I just take a quick look back on the hour first. Right here, the liquidity right here got taken out. So if you draw a quick line over, this is just a trade recap. So the buy side liquidity got taken out. Price cleared, went up, cleared liquidity before it went back down. So you can see right here on the 1 minute chart. I'm on the 1 minute chart last night. So with the buy side liquidity cleared, looking down, right here we are on the 1 minute chart. Price, let me get the arrow out. cleared, broke structure right here. I'll take it as the break of market structure. So it broke market structure and then I entered a sell right here. Sell right here because of the market imbalance resting right there. You can see very closely. A quick one, very, very quick one. Market imbalance resting right there. So I sold it there. Sold it there and then. Let me get the short. Oh my god, it's not. Okay, it's here. Okay, I shorted it right here. Price retraced up, back up with my stop loss above. 8.9 pip stop loss. And then where did I go? Let me go back to the 1 hour. 1 hour chart. Okay, it's right here. I take profits when I closed at the next pivot area or the previous low. So when price reached here, I immediately closed. So it was a 1 to 8.37 risk to reward ratio. So you might be thinking, oh, that's very, very unbelievable. How are you able to do that? It's on the 1 minute chart. So, and then with the fundamental news in play, let me show you. So yeah, here you can take a look. That's actually shorted EU down all the way from the very, very top. It's the same chart. So this was yesterday. I shorted it from the very, very top on the 1 minute chart using smart money concepts. So break of market structure is just like that. Break of market structure, imbalance, sell all the way down. So it increased my account by 8%. So yeah, and today I'll be taking it pretty chill due to the yesterday's profits. And tonight we have the FOMC meeting. So expect a lot of volatility in the markets. So yeah, 4 hour chart, let's get back to it, clear this out. So yeah, this is just how I trade. I don't use any indicators, I just draw it out nicely. So do you have any more questions before I end this webinar? Any more questions? If you want to learn smart money concepts, you can find it on YouTube. There are quite a few people who are teaching smart money concepts for free. So yeah, any more questions? If not, I will be ending the webinar. So I just presented my personal trading style. So how I trade. Oh no, thank you. Hey, no worries, Eric. Hey, thank you very much for the support. Thank you for listening to me, man. Thanks, Eric, and you have a good day and safe trading ahead. So tonight's just a reminder, the FOMC news is coming out, and Friday we have NFP. So this week I'll be taking it rather chill, rather relaxed. Nothing much. Hey, thank you, man. See you, man. Hey, bye, bro. Bye. Hey, thanks for attending.